Well, Tesla is jumping back up this morning, rebounding after yesterday's losses. The economy, I mean, the general stock market also seems to be rebounding from yesterday's plays. The Nasdaq in particular is back. So, is this indicating anything? Are we just having a little revisement of the pullback and or the rotation that we've seen taking place the last 5 days? It'll take another week probably to really know directionality on all of that. But just now, coming in this morning, we have got Elon Musk replying to 𝐒𝐭𝐤𝐚, 𝐒𝐭𝐨𝐜𝐚. He says that yes, Cybertruck FSD released with 12.5 also finally merges city and highway code. So both the Cybertruck and the full stack, everything on one stack, is on the 12.5. So we will all be looking forward to that, especially those like Larry and others who have got their Cybertrucks and are sad that they have to move back and forth between vehicles that do and don't have the FSD. Anyway, limiting factor this morning, he says, this is really big. Just breaking. We have another report claiming that Tesla is about to solve the dry-coated cathode. This one's out of China. According to the article, the short story on this is that the dry-coated cathode machines kept breaking because the cathode material is harder than the anode material. Each time that happened, there was 45 days of downtime. The simple solution was to replace the equipment, but that required a capital outlay for some new equipment, and Tesla was trying some workarounds they thought would work. However, they finally decided to upgrade the equipment from new suppliers. That aligns with other reports he's also seen on this subject. So we now have 3 or 4 sources saying the same thing about dry cathode coating process, that it is solved and it just needs to be scaled. However, as we know, scaling is grueling and it could take a year until we actually get a cell and can confirm that. Hopefully, we don't have to wait that long and Tesla confirms it in an earnings call. But I expect even that would be at least a quarter or two away. That would fall in line. This is Randy now. That would fall in line with the idea that the September is the time when they will finalize this particular version and then really begin to ramp. Either way, lots of positive news, he says, and either rumor report I've seen is that the cell team at Tesla is optimistic about finally fully delivering the full dry-coated 4680. This would be absolutely amazing. The impact, most people just don't quite understand the impact if Tesla's able to get that factory going up to 100 gigawatt hours of production, then begin to move to the second 100, as well as move that do a similar setup over at Reno, where they're hoping to make 500 gigawatt hours, and over to Berlin, where they're expecting to do 100 gigawatt hours. And all of this, as mentioned in a couple of different reports, takes a lot less footprint, so might be able to also be done at Shanghai. Anyway, we'll see what happens on that. It is massively good news. Don't know if that's moving the stock this morning, but the stock is doing quite nicely this morning, up about 5 last time I checked. This is from AJ. He says, look, this is also, he calls it breaking news also. Tesla received a giant 15.3 gigawatt hour Megapack order from Intersect Power. This order alone equates to approximately 165% of the total deployed during the second quarter of 2024. So remember, it was 9.4%, 9.4 gigawatt hours deployed in the entire quarter. This is one order that's 1.5 times that size. So it's likely we'll see similar announcements in upcoming months. So this would be another reason why the stock could be up this morning. That's a big, big order. By the way, they're going to be changing, Elon wanted to move the date from 8/8 to October with regard to the robotaxi unveil, or the CyberCab unveil. People have been talking back and forth about what in the heck is they changing about the front end of the car that would cause them to make this decision. One of the individuals who is, I think it was from, I'm trying to remember now, I think it might have been from Patreon, He said he thinks it might be a vending machine being put in the front end of the car. You'll remember that about 3 weeks ago, I started talking about that the cars should have a vending machine. They should dispense water at a bare minimum, maybe also dispense some kind of iced coffee, Diet Pepsi, of course, for me. But anyway, some kind of vending machine. And he's thinking maybe this would be at the front end of the car. You'd open, that's what he said. It could be a vending machine. My thinking is, hey, you just open a refrigerator door, so to speak, at the front of the car. It's self-service where when you pick up the product, it automatically hits your credit card. Anyway, this could be something that would require a lot of complex changes in order to make a prototype vehicle that had that. One idea. Let me know in the comments below what you think. All right, this is from Torque News Auto. He says, construction of the Tesla semi-volume production facility is progressing rapidly. After completing grading and drainage work last week, in 1 week, Tesla has been moving to footing work with footing trenches already dug on 1/3 of the future factory floor. Wow, this is really super fast. I have a suspicion that they're trying to put this building up incredibly fast. Everything was all planned. Steel came in really early. Be interesting to see how fast they get this building up. All right, this is Randy Kirk. If you have not done it yet, this is a great time. Hit that like button, subscribe. Why haven't you subscribed yet? Explain that to me. Okay, and then hit notify if you'd like to be notified. Of course, this morning, Cern Basher will be on this morning. And then later tonight, we will have Bradford Ferguson helping me to explain why we had such a great day today. He'll be talking about that. And then, of course, joining Patreon and helping me to, send me information and stuff. Of course, you can do it on X. You can do it a lot of different ways. But man, on Patreon, believe me, if you hit me up on Patreon with an idea or discussion, or you want to have some feedback, that's the fastest way to get my attention. Okay, this is, and I just had one more person. Thank you very much. 𝐒𝐻 has just joined Patreon. Thank you very much for helping to support the channel. We have this from the Beige Book this morning. Now, the Beige Book, of course, is the Fed's compilation of all of their different districts. So each district reports individually, and you can actually go on the Beige Book and you can see how each district is faring, what's happening with each of these districts. I don't look at all the districts. It would take probably an hour to go through, and I don't think there's any real benefit to that. So what I do is I look at the general one, the overview, and this is the overview. Economic activity maintained a slight to modest pace of growth in the majority of districts this reporting cycle. However, while 7 districts reported some level of increase in activity, 5 noted flat or declining activity, 3 more than in the prior reporting period. Wages continued to grow at a modest to moderate pace in most districts, while prices were generally reported to have risen modestly. Now, everything so far would be good news, except for looking like a slight decline in overall activity. Household spending, while little changed this period, according to most district banks, I'm sorry, they said that very badly. Household spending was little changed this period. Auto sales varied. Of course, we know there was a cyber attack, which is throwing off all the numbers with regard to auto sales. But in general, they're saying it was okay on auto sales. Most districts saw soft demand for consumer and business loans. That's interesting. Reports on residential and commercial real estate markets varied, but most banks reported only slight changes, if any, in recent weeks. Travel and tourism grew steadily and was on par with seasonal expectations. Agricultural conditions varied, had sporadic droughts across the nation. Man, I was hearing way more about floods than I was droughts, but okay. Districts also reported widely disparate trends in manufacturing activity ranging from brisk downturn to modest growth. We saw this with New York being down and Philadelphia being up. Retail restocking spurred slight growth in transportation activity. Well, I'm hearing good news about transportation. Transportation appears maybe to be out of its recession, and we're starting to see some growth, and this could be a canary in the coal mine. We'll have that transportation index information in a couple of weeks here. Expectations for the future of the economy were for slower growth over the next 6 months, due to uncertainty around upcoming elections, domestic policy, geopolitical conflict, and inflation. All right, then we also had the Wall Street Journal quarterly economic survey. It was boring. It was useless. Don't even read it. Here was the overall assessment. For about 2 years, economists consistently underestimated the strength of the U.S. economy, forecasting that the economy would grow slower than it did. This changed recently when growth was lower than expected in the first 3 months of the year. Still, most economists believe that a slowdown was inevitable after a period of rapid expansion and too high inflation. The economy, they argue, is normalizing rather than deteriorating. Boy, that would be just the opposite of my think. Well, I think we are normalizing. Agree with that. I think we are normalizing, but I don't think that the fact that we might be looking at zero growth in the third quarter or negative growth in the negative GDP growth in the third quarter is a matter of normalizing. I think that is deterioration. But I also believe that we will have at most 2 quarters of this deterioration, and that by the first quarter of next year, we will be on our way to a fairly nice boom. That's my thinking. Who knows what's really going to happen? I've just been right for the last, pretty much since I started the channel with regard to the economic trends. And so that's what I'm thinking is going to happen coming up. Market Watch says this morning, the Philadelphia Fed, oh, I'm sorry, I had not reported on the Philadelphia Fed, but I knew about this already. The Philadelphia Fed said Thursday its gauge of regional business activity rose to 13.9 in July from 1.3 in the prior month. After reading any kind of a reading above zero indicates improving conditions. And this is the 6th straight month that this index has been above zero. Philadelphia needs to go teach New York what to do. Economists polled by the Wall Street Journal expected a 2.9 reading in July, so beat the heck out of that. It is the highest reading since the April reading of 15.5, and that was a 2-year high. The index of future activity jumped to 38.7. So, I mean, this Philadelphia, what's going on with the Philadelphia region? The barometer on new orders rose to 20.7 from 2.2 the previous month. Shipments index jumped to 27.8 from a negative 7.2 in June. Employee index showed some strength in July. Prices were mixed, it said. Anyway, it says there are some signs of the pickup in manufacturing. Economists expect further growth, but at an uneven pace. Okay, then we have the unemployment number this morning, the initial unemployment report. So, number of Americans filing new applications for unemployment benefits rose more than expected this week, but there's been no material shift in the labor market. The data is typically noisy in July because of summer breaks and temporary factory closures. Initial claims for state unemployment increased 20,000 to a seasonally adjusted 243,000 for the week ended July 13th. Economists polled by Reuters had forecast 230,000. So, depending on how you look at the market, this would be a good news that we're seeing more slowing in the economy. And of course, that would help to presage the dropping of interest rates in September. But what we had was New York negative on manufacturing, Philadelphia positive. We've got positive manufacturing information coming in from multiple places right now. We've got all kinds of information indicating that the consumer is still spending and yet running out of money. So, I mean, it's just all mixed. All right, the Conference Board of Leading Economic Indicators. Remember this, if most of you are old. Most of my listening audience are over 55. If you're over 55 and you've been paying any attention to the economy, the stock market over the years, you know that the Conference Board Leading Economic Indicators used to be the gold standard. Nobody's paying any attention to it anymore. I did a report yesterday or the day before that explained why maybe it's been so wrong for the last 2 years. It just might have to do with all this, the COVID and the aftermath of COVID, and that the Conference Board isn't taking enough consideration into the services end of the business. Anyway, having said all that, here's what they came out with this morning. The Conference Board said for the U.S., the leading indicators declined by 0.2% in June to 101, and 216 is the standard at 100, following a decline of 0.4%, upwardly revised in May. Over the first half of 2024, the LEI fell by 1.9%. Now, that is a smaller decrease than its 2.9% contraction over the second half of last year. So this is their interpretation. The U.S. LEI continued to trend down in June, but the contraction was smaller than the past 3 months. Business cycle indicators at the decline continued to be fueled by gloomy consumer expectations, weak new orders, negative interest rate spread. We know about that. That's the inversion, and an increased number of initial claims for unemployment. However, due to the smaller month-on-month rate of decline, the LEI's long-term growth has become less negative, pointing to a slow recovery. Taken together, June's data suggests the economic activity is likely to continue to lose momentum in the months ahead. We currently forecast that cooling consumer spending will push U.S. GDP growth down to around 1% annualized in Q3 of this year. Now, that's the annualized amount, not the quarter-over-quarter number. The Conference Board Coincident Economic Index for the U.S. rose by 0.3% in June after increasing by 0.4% in May. The CEI grew 6.6% over the first half. About half of that growth rate has been over the previous 6 months. The CEI's component indicators, payroll, employment, personal income less transfer payments, manufacturing and trade sales, and industrial production are included among the data used to determine recessions in the U.S. All 4 components of the index improved in June, with industrial production making the largest positive contribution. Then we have the lagging economic index, inched up by 0.1% in June. The lag's 6-month growth rate rebounded to 1.2% over the first half of the year, substantially higher than its 0.3% increase over the last half of last year. Also, please note that the VIX volatility index, also known, of course, as the fear index, has been quite up the last few days, running up around 14%. Recently, it's been pretty solid in the 12s. Right now, it's up around 14. When I say 14%, up around 14. I'm still looking, of course, for a pullback in the third quarter on the stock market. I believe the stock market is going to fall back further. I think this is it may be a rotation. I've been predicting a rotation for way too many months, maybe 6 months, maybe 7 months, 8 months. So I've been expecting a rotation, and the rotation might still take longer. This might be a false rotation at this point. I think there's a likelihood that this was a false rotation. I think it's more about a pullback. All right. What's happening now, and how does it impact my prediction, what I think is happening? Let's start, of course, with Tesla. And Tesla this morning is now up 566 to 254.16. The Dow is up 176, continuing its record-setting pace. The NASDAQ is rebounding this morning, up 48.81, but not as good as the Dow. S&P up 18.55. We have got the Magnificent Seven basically down this morning, but not like yesterday, just generally down a little bit. But NVIDIA and Meta are up in this down Magnificent Seven market. We have got the Cathie Woods mix this morning, but very narrowly, very like a penny and 2 cents and 4 cents. But, in general, mixed, some up, some down. Okay, so kind of except for the Dow, kind of a flattish morning. But a little bit responsive to yesterday, but with the Dow continuing to plow forward, which would suggest that rotation at least a little bit. Let's go ahead and look at the percentages. We've got the Dow is up 0.39, NASDAQ up 0.23, S&P up 0.30, and Tesla up 2.37, doing quite nicely this morning. Maybe some of that news that we talked about earlier, maybe just a continuation of the rally into earnings, which is kind of to be expected, given a lot of folks know it's going to be a beat. All right, let's go ahead and look at the bonds. The bonds. Okay, so Treasuries, the 10-year is up 2.7 this morning, back up to 4.172. That's a good number, though. I'm very happy with that number right there. That would be an indication to me that the bonds are still expecting that 0.25% decrease in September, which I'm not. I have not given in yet. I still think that we may be looking at November or not at all. We'll see what happens with these employment numbers and the PCE at the end. Well, the PCE, I think, will come in great, but the employment numbers could change everything. The 2-year is up 1.5 this morning. The 2-month down 0.5% of a basis point. The 2-year to 10-year is right about 27 again. So we've been hitting about 27. So we were at 30, way over 30. We've been at way over 35. We were stuck at 35 for a while, dropped to 33. Stuck at 33 for a week, then came down to 23, but now back up to 27. So now kind of in that range. So we have not really broken this pattern yet. It needs to break all the way down for it to absolutely signal that we're in a recession. It has not broken back into a reverse of the inversion. And of course, the 2-month is even, it's still way over 100 basis point inverted. Okay. By the way, that I'm hearing reports now that Megapack order we heard about is by far the largest Megapack order ever received. And I think we would have known that. I think we kind of had a clue on that one. All right, let's go ahead and look at oil. Let's go ahead here. Oil is down again this morning a little bit, 37 cents on Texas, down 47 cents on Brent, sitting at 82 and 84. Still only $2 between those two, but this is kind of in the bottom half of the range. But I think this is, I'm sorry, but I think the Saudis and the OPEC folks are controlling this market right now by deciding whether to increase or decrease. And they want it to be between 80 and 90. I think that's what they're trying to do. Natural gas up 3% this morning. That's a rebound. I think that's gone too far negative. And so this, I would expect to now see some pushback on that natural gas, falling all the way almost into the one handle. Okay, we have got gold this morning up another $7. It's 24.67 this morning. Silver up 0.45 at $30.51. Copper down 2.15 this morning at $4.31. Again, kind of moving a little bit toward the low end of its range. We've got the dollar up against the yen. That's a reversal. Still no intervention, I guess, on the yen, and the dollar down a bit against the euro. We have got Bitcoin down 396 to 64,274. So that is now hitting in the middle of its range. Yeah, okay. I think that's all that we have on the various markets, except checking once again on Tesla, which is off of its high, only up $4 now. Okay, so this morning, as mentioned, we will have Cern Basher just in a little bit here, unless there's breaking news that interrupts that. We will have Nicholas, I'm sorry, not Nick. It'll be Bradford Ferguson on tonight for good news. We will also looking for you to join Patreon. And then yesterday, I did the most important video I have done in a while in terms of stuff that nobody else is talking about. The video did extremely well. Lots and lots of people commenting that they really appreciated the analysis. And what we were talking about there is the benefits to Elon Musk, all of his companies, the benefits to Tesla of his budding bromance with Trump, the reasons why he would be investing $180 million into the Trump campaign in order to make sure that Trump wins, because there's massive advantages to Tesla and to Trump if we have a more friendly administration. And I think Trump wants a seat at the table, but we talk about that in detail. There is the card right there where you can go and check that out. Highly recommend that you do. I'll be talking a lot more about it in future, but please go ahead and take a look at that. All right, that's all I got. It's been great talking to you.